Hey everybody, my name is Daniel Mahabir, the team leader for the Mahabir Real Estate Group here at Keller Williams VIP. And the purpose of this video is to provide you a market update for the Las Vegas area for the month of August 2021. So what we're going to do is we're going to go over some market stats. We're also going to share with you some helpful tips just in case you or someone you know is thinking about buying or selling a home in the Las Vegas area. So let's just jump right into what was going on with the numbers. And as you can see here, for the month of August, we had 3,116 sales. That is actually a 4.36% drop when compared with the number of sales in July. And this is something that we've been seeing for 4 out of the last 5 months. Sales activity is actually slowing down simply because there isn't a lot of inventory around to sell. Make no mistake about it, it is still much better than we were this same time last year. As you could see here, it's almost a 12% growth in sales year over year. Days on market refers to how long does it take a home to sell once it is listed. So as you can see here, within a matter of a week or just over a week, at 8 days, a home will find its buyer and go under contract. Now, that is a little bit longer than what we saw the previous months, where that number was hovering closer to 6 to 7 days. So we'll get more into why homes are taking slightly longer to sell in just a minute. The median sales price for a home is at $405,000. This was the same number we saw in the month of July. However, it is a 19.5% increase in median sales price when compared with the same time last year. Obviously, due to lower interest rates, we are seeing buyers have a lot more purchasing power. And when you think about, a lot of our buyers are coming from out of state where there is a higher cost of living. That's obviously going to be driving prices up. Last but not least, we did have 4,080 new listings hit the market in the month of August. That is slightly less than we saw in July. However, a 3% jump in new listings compared with the same time last year. What that tells us is that there are now more sellers comfortable putting their house on the market despite some of the concerns with COVID-19. Some other really important numbers for you to know when it comes to real estate, first off, is the Nevada unemployment rate. Obviously, if there are people having no job, they don't have the ability to pay for their mortgage. And as you can see here, we have a 7.7% unemployment rate in our state. Now, that is as of July 2021. August's number has not come out yet. But the good news here is that it is slightly down compared with this same number in June of 2021, and a significant decrease from where we were at in July of last year. The average 30-year fixed rate mortgage, great news for our buyers. It is still hovering below 3%. So if you are in the market for buying a home, or hell, even refinancing, there's a good chance that you could take advantage of a very, very low interest rate. Last but not least is, where are we at with housing appreciation? You've heard it if you've turned on the news, if you read an article about the real estate market. Prices are going up. And just to depict how much, compared with the previous month, just 1 month, we saw over 3% appreciation. Now, compare this with over the last 12 months. In the last 12 months, we've seen 19.84% appreciation. That is absurd. Usually in a 12-month period, we typically see 6 to 7%. So 19.8%, that means prices have moved up astronomically fast. So what we're going to do here is, rather than spit at you a bunch of numbers, we're just going to take a couple more minutes and take you through 3 very specific stories that our team is finding us having on a daily basis with our people. The first story is going to be what exactly is going on with inventory and how is it impacting the home buying and selling experience, especially because, hint, hint, the market is going through a bit of a shift right now. So it's important that you pay attention to that. We're also going to answer some of those top questions about what's going on with the eviction moratorium, especially since it's been removed. What does that mean for you if you are a tenant or a landlord? And then last but not least, with the eviction moratorium being lifted, and in addition to some other factors and concerns, when is the housing market going to crash? So we're going to answer all 3 of these questions as quickly as possible. Let's jump right into the state of inventory first. Before we do that, we'd like to pause and remind you, if you are thinking about buying or selling a home, obviously we would love for you to reach out to your Mahabir Real Estate Group agent. If you are looking to just get a hold of us, call or email us today. You can reach us at 1-844-MAHABIR. That's 1-844-624-2247. You could also email our general inbox, admin@mahabirreg.com. All right. So again, the first conversation we're going to have is what's going on with the state of inventory. And the theme here is going to be what's gone down must come up. So what do we mean by that? Well, throughout the year 2021, one of the big stories in real estate has been there have been no homes available to sell. That's right. If you were buying a home, you probably knew this. There weren't a lot of options available for you. And with the options that were available, you were likely going up against 20 other buyers simply because that was the best option on the lot. So for the month of August, we had 4,914 homes available. Now, what you'll see here at the very bottom of the screen is that is a 1.5%, just over 1.5% increase month over month. Still, we are seeing a lot less homes the same time last year, but there is a big story to be talking about here, which is that month over month. As you can see here, this is going to show you what's going on with active inventory each month for the last 12 months. And you'll notice there's a bit of a dip, and then it's starting to, guess what? Slowly rise up. That's right. Just under a year ago, we had 6,946 homes available in the market. That was in the month of September 2020. Looking fast forward to February 2021, you could see that number took a significant dip. And then in March of 2021, we saw the lowest number that we've seen in quite some time, probably ever. 3,788 homes were available for the month of August. Okay. Since March of 2021, we've seen the number slowly and steadily climb up. This is very, very important if you're thinking about buying or selling a home. What's happening as a result of inventory increasing? Well, just the month of August compared with the month of July, we saw a 19% increase in expired listings. This is referring to listings that could not sell on the open market. And as a result, the contract to list that property simply expired. So a 19% increase in just 1 month on expired listings, that tells us, hey, there is such thing now as a listing not being able to sell in today's super crazy hot market. What else did we see? We saw a 20% increase month over month in price reductions. What this means is what we track is the number of listings out on the market that had to reduce their price in order to either attract more traffic or ultimately get more offers. So if a property isn't getting the activity, they'll simply reduce the price and get an influx of new eyes on the property. 20% increase in price reductions. There was a time where properties just simply didn't need to reduce their price because they were one of the only properties out there on the market. Not quite the case anymore. Last but not least, we are seeing slightly less homes selling at or above the list price. That's right. There was a time, especially early in 2021, where because there weren't a lot of competition out there, you could take a look at your home, look at its fair market value, add 5 to 10% on top of that, list it, and you'll still likely get multiple offers. We're just not seeing that be the case as much right now with more inventory. Not as many homes are actually closing at that list price that they were putting out there. So let's talk about who is snatching up the homes right now. And this is another big story. 30% of the buyers out there right now are cash buyers. 50% of the buyers are conventional loan purchasers. And only 20% are combining the FHA and VA buyers. That's right. If you are buying with an FHA loan or a VA loan, unfortunately, it's just been a bit of a challenge. And part of the reason there is because with listing agents and sellers looking at offers, especially when the number of offers coming in is so high, they're looking for buyers that actually have a lot of cash on hand, just in case, for instance, an appraisal comes in short. Can a buyer cover the gap between the appraised value and the offer value? FHA and VA buyers typically don't have a lot of cash, or at least that's the perception. And as a result, they're getting beat up in the market. All right. But cash buyers have been the big story for us. As you can see here on this next slide, there's been quite a bit of an influx of cash buyers coming into the market since early this year. Traditionally, we've seen about a year ago, 400 or 500 cash buyers hitting in the market every month. That number has easily passed 1,000 over a couple of months. And it's now been hovering around the 800 to 900 mark. So why are these cash buyers now coming into the market? The big thing is, for one, house flipping is becoming a really attractive thing here. We're seeing small mom and pops to big institutional investors coming into the market and saying, I will buy your house regardless of what the fair market value is. I could still fix it up, flip it, and sell it in a reasonable amount of time for a lot of money simply because there isn't a lot of competition out there. So cash buyers are coming for that. Institutional investors are coming for short-term rentals. So why short-term rentals? Well, simply put, there aren't a lot of rentals out there available right now. So whether it's people are traveling, looking to go into the woods and get an Airbnb, the institutional investors are looking to snatch those up. Or if you're looking to move to the Vegas area, you're a little bit nervous about pricing, you simply can't afford a home, you're looking for a rental. And the fact of the matter is there just aren't properties available for rent either. Great opportunity for investors that are looking to take advantage of these rising rent prices. So why is inventory increasing? Let's get back to that conversation. I think of three specific reasons why. The first of which is buyers have simply just gotten tired of getting beat up. So that's something that we call buyer fatigue. When you time and again, you write an offer because you're emotionally invested in property, you get beat out because you had 5 other offers that were maybe a little bit higher than yours. You do that 5, 6, 7 times over and over again. You're going to get sick of the market and you're going to wonder, is it even worth it to go through this emotional roller coaster at this time? A lot of buyers are saying not right now. Additionally, and this is something we've seen for a few years now, the homeowners are actually staying in their home longer. Typically, we'll see somebody stay in their home only 5 to 7 years. Now the homeowner is staying on average in their property somewhere around 10 to 13 years. Just don't want to move as often as we've seen in the past. And last but not least, inventory typically does increase during this time of the year. Once school is now back in session, the weather starts to get a little bit hot, and then all of a sudden the holidays are rolling around. We do experience market seasonality. Inventory comes up, buyers go away, and it's just a part of the story here. So it is something for you to keep in mind. The market is going through a shift. You might have seen a neighbor just a month or two ago say, yeah, it was crazy. I had 20 offers. I had all these people looking at this home, and yeah, it was great. I sold the house for $25,000 above my list price. And just in a matter of 2 months, now that story's changed. It's not because of your agent. It's not because of you, and it's not because of your property. The market is just simply going through a shift right now, and you have to shift with it. So if you're a home seller, here would be my need to know for you. Be careful with the pricing of your home. You can see it here, it will cost you thousands of dollars. And what I mean by that specifically is we've seen, again, sellers say, okay, where's our fair market value at? Let's add 5 to 10%. We're still going to get offers. The sellers that are doing that now are actually seeing their homes sit on the market far too long, to the point where they're missing what we call their window of opportunity. Window of opportunity refers to when a property has the most eyes on it. And that's obviously going to be when it hits the market for the first time. But there's a certain amount of time where that window of opportunity remains great, and then it closes. That window of opportunity is based on how much time will a buyer give on a property before they believe there's some sort of stigma going on with it because it hasn't sold in a reasonable amount of time. And guess what? The window of opportunity has shrunk quite a bit in today's market, where, and I see it myself representing buyers, we'll see homes, the great homes move in 3 or 4 days. And as a result, if a home is sitting on the market 8 or 9 days, something's wrong with it. That's a great opportunity there. That's what you got to be careful for with the listing of your home. If your home doesn't move fast, you might create the stigma. And it all starts with, how are you pricing the property? Now, if you're a home buyer, this doesn't mean that, hey, prices are going to come tumbling down, or that you could take your time with buying a house. I would act with the same level of intensity and intentionality when going out there and buying a home. The one thing that you would want to keep in mind as a silver lining is that you probably now have more options available to you that you would consider viable options for your next purchase. So look at your portal again. Get yourself back mustered up into the home buying experience, and let's see if in your home buying search, you might have an option that fits your criteria. Let's go into the next story, which talks about the eviction moratorium. So the quick story here is that the eviction moratorium was set to expire at the end of July. The CDC actually made a decision to extend that eviction moratorium out an additional 60 days. That actually extended the moratorium out to October 3rd here for the state of Nevada. And then the Supreme Court actually ruled that the CDC does not have the constitutional right to be putting in place this eviction moratorium. So they actually put a kibosh on it. And as a result, that has lifted the CDC eviction moratorium. So we have to be honest about why this is being lifted. And one of the big things that we have to keep in mind is that there are a lot of mom and pop shop landlords that are making up these investors. these investors that are renting out these properties and can't collect rent because of the eviction moratorium, the rent that they would be relying on to pay for their mortgage. As you can see here on this article, according to Channel 3 News, 56% of mom and pop landlords were not paid by renters under the eviction moratorium. So that's a lot of people that couldn't potentially pay their own mortgage when they were providing housing for other people. We just have to put an end to that kind of situation. Now, that also means we have to stay cognizant about the unfortunate circumstances that a tenant is now facing with no longer there being in place an eviction moratorium. And if you are, or somebody you know is negatively impacted by this lifting of the eviction moratorium, I don't care if you're a tenant or a landlord, you need to know about this company here called Legal Aid Center of Southern Nevada. Who they are, they're an organization born in 1958. They've really grabbed the bull by the horns when it comes to getting the information, education, and resources out there around how you can protect yourself with the lifting of the moratorium. What you need to do is go to lacsn.org, lacsn.org, and that is the website for the Legal Aid Center of Southern Nevada. At the very top of their website, you're going to see a banner that provides you a toolkit of legal aid resources when it comes to COVID-19 and the eviction moratorium. You could find everything there. What are the programs for rental assistance? How can I get paid if I'm a landlord and I haven't been getting paid? How can I make sure that I don't get kicked out of the house? How can I get set up for mediation? It's all in there. You just got to go to the website. So please share the website out. Again, it's lacsn.org. And you look at the very top of it, you'll see the banner. You can't miss it. Now, everybody's asking, as a result of the eviction moratorium, what's going to happen to the housing market as a result of this now being removed? Will housing prices come crashing down? And in some crazy way, a lot of people are just tying the two together. So why don't we actually just go ahead and do that as a professional? Is a crash coming as a result of the eviction moratorium? So let's break down a crash first. So stay with me here, okay? A housing market relies on the law that we all know, the law of supply and demand, okay? So the price of goods depends on its supply and its demand. So when we have low supply and high demand, we are in a seller's market, meaning prices are going to be astronomically high. The product or good is going to move super fast because there's a lot of people going after a very short amount, okay? What you are referring to if you think a housing crash is going to occur, like it did in 2007, 2008, is when there isn't that demand. And in fact, there's a massive supply, otherwise a surplus of the good out there. That's it. If we are to see a housing crash in 2021, regardless of what market you're in, you need to see this occur. The demand go away and the supply going up. Now, I'm going to be honest with you. There is a chance for this to occur. And let's talk about what could lead to a buyer's market and ultimately this housing crash. The first thing that I'm watching out for is the interest rate, specifically the interest rate on a mortgage. Now, the Federal Reserve has taken specific policies and actions in order to keep the mortgage interest rate artificially low. The minute they stop doing some of these actions, which we're not going to get to in this video, but the minute they start removing some of those actions and policies, you will see the interest rate fluctuate in the upwards direction. And we've seen this in the past. When an interest rate goes up as small as a quarter of a point or a half a point, that could lead to drastic differences in a person's ability to buy a home and, quite frankly, their perception of the value of that purchase. Right. So if we do see an increase in interest rates, which is going to come, it's not a matter of if, but rather when, and it could be sooner than what you might like if you're looking at buying a home or refinancing. But when it happens, we are probably going to see either people get emotionally tied to the fact that now their interest rate has gone up, or two, they just simply can't afford a home at the current prices with that higher interest rate. So something to look out for the mortgage interest rate. The second thing is, yes, with the eviction moratorium being put in place, what kind of strain did this create for landlords? It put them through a roller coaster. A lot of landlords, as we saw in that article, could not collect their rent because of the eviction moratorium being put out there. So do they want to face the risk of that headache again? Would they rather get that removed? I know a lot of people who it's great passive income opportunities. They don't want to deal with it. They'd rather sell their house and move on to the next situation. Could we see a massive influx of listings from these landlords that were sick and tired of the situation they had to deal with throughout the eviction moratorium in fear of it happening again? That is something we could be watching. The last thing is something that we've been dealing with for several months now, which is housing affordability. You've heard it here already, almost a 20% increase in home values in just the last year. That's priced a lot of people out of the market, especially our first-time home buyers, to the point where they're looking at properties they typically would not purchase. I'm talking about condos, townhomes, and hell, even in some cases, manufactured homes. So we got to be careful with this. With housing affordability, the thing that's keeping many of these buyers in the equation, go back to that point number one, interest rates. And when that goes up, it's going to create even more of an issue with housing affordability. When these three issues combine, we could see a crash occur. It's just a matter of monitoring the situation over the coming months. Now, let's be honest though. The chances of this occurring right now don't seem very high. And I want to share with you a couple of things. First of all, let's take a look at the fact that the current homeowner has a lot more equity in their home than they did in 2007, 2008 when they were just getting into a home. That's because a lot of these people, they've hung onto their home for a very long time. You combine that with the fact that a lot of these home buyers have seen massive increases in their equity because values have gone up. They're just not in a situation where they're distressed and have to put their house on the market right now in order to sell. That leads back to that increase in inventory. We just don't see the need for an increase in inventory because people stay in the house longer and they're not in a distressed situation because of the equity. Another thing, talking about that low demand, we just don't see on paper that the demand's going to go away anytime soon. I'm looking at my friends and family that are of the millennial age. That's right, that 25 to 40-year-old person. We have a lot of those people that are coming into the home buying age of around 33 for the next 6 to 7 years. So that's a lot of first-time home buyers that are going to be coming into the market looking to achieve the American dream. It's just not going anywhere anytime soon. And last but not least, again, coming back to a little bit of a combination of both. Specifically, when I look at would inventory come out there just like it did in 2007, 2008, you got to keep in mind a lot of that inventory came out of nowhere because people were getting loans that they shouldn't have been able to get. Lending standards were very, very low. A lot of predatory lending practices occurring in 2007, 2008. We just don't see those kind of standards being put in place today. Much higher lending standards, and as a result, if you're buying a home, there's a lot more looking into, can you afford this house? And if for some reason you lost some of the equity, you're not forced in a situation where you need to sell, we have a lot more tighter standards there in place. So, what are my predictions? When would the housing market crash? I would say we need to be monitoring the situations that are folding out over the next 6 months. What happens with the eviction moratorium, what happens with interest rates, and what happens with unemployment are the big things we need to be monitoring. But keep in mind, we don't have a reason to see a massive influx of inventory or a massive removal of the home buying demand just yet because of what you're seeing on your screen right now. My name is Daniel Mahabir. I am the team leader again for the Mahabir Real Estate Group. I hope you are enjoying your experience with your MREG agent. We love to help our people with home buying and selling. So if you or somebody you know has a real estate question, please let them know to reach out to us right away. We have, again, a general email as well as a general phone number. We also have a website you could check out, lasvegas.kw.com. Has a bit more information and a great home searching experience in case you're curious about the value of your home or what's out there available for sale. Thank you so much for watching. I hope you have a great day. Bye-bye.